Hello, everyone. Welcome to Smart Investing. This video today is going to be about the banking services sector. So, for this video, I have only 5 bank stocks. Again, they're not going to be a lot of stocks. And again, I apologize from the beginning if this video is too long. I know I talk too much, but I just try to provide the best uh, and most valuable feedback and most informative uh, stuff that I can provide, so that way you guys can understand the way you know the way things work, the way I can see the stock market on my end, so that way you guys can see it the way I see it. So let's just jump right in. So I have these 5 stocks. I'm not gonna talk too much. I'm gonna try to just jump right into it and just go right at it. So today is November 9th. Uh, there's been a quite a few things going on. As for major news, a lot of crazy stuff going on. Uh, I'm not gonna talk about that, but anyhow, we're gonna move on to the 5 stocks that we have. So starting off with the first stock. First stock that we have is EBSB. So again, markets are closed, and we're gonna be doing the evaluation for fundamentals, technicals, and a little bit of the quants. So for EBSB, known as Meridian Bank Corp, $24.15. So first page, I'm gonna tell you if I like the numbers or not. Uh, I'm not even gonna go over each number. You guys should know what each number is. If not, then just comment on it, and I can always explain it. But overall, I'm just gonna look at overall at the numbers, see what I like, what I don't like, and see if it's a good stock or not for the long term. If it is good for the short term, I will let you know, and then I will state which strategies are best for this stock, if it is a possibility for it as of right now or not at all. So what I'm looking at is this whole section here. I like what I see. Um, so for income, that's too low. Market cap, now I'm looking at that. I'm not crazy about the 52-week high and low. It still needs a little bit of work. Again, it has potential, but as I stated in my last video, bank stocks are on a uptrend, so it's hard to see if this stock is okay or not. So for a growth stock, banks, I don't like banks for growth stocks. I think there are other stocks and other sectors that are better and actually, uh, you know, better positioned going into 2023 to go on an uptrend, and actually not only for short term, but to keep for the long term as well. So, um, there might be, like, for example, you might have a list for the same sector, like let's say for banks, and then you might have a few of them that might be good for the short term, and then a few for the long term. So I guess those short term plays, it could vary, for a few days or a few weeks or whatever, and then just depending on the stock. And then I guess once you cash out, you can use that towards your long term portfolio. So that's one of the main strategies I use. I like to get in and get out, and then use that towards my long term portfolio. And that's usually a good strategy because it's only like adding, you know, an additional capital towards your long term portfolio if you know how to play it right. So anyhow, let me move on from that. So the numbers are okay. Now I'm looking at the shares. So it looks like they are buying shares. Um, Pretty decent amount. So we're looking at about 5 million shares that are being held onto. Now again, 5-year high and 5-year low. So we're looking at about this range and this range. So now I'm looking at the actual price. So around $14 and like what, 25 cents, and we're looking at about 20 and 75 cents. So it broke that high of 20 right around like I said, 20. It broke it around here. So we're gonna look at the last 3 months. We're gonna see what's been going on the last 3 months. It's been on a tear. So around here. So as we can see, at around October, that's when it started going into new highs. It took a small dip, and then it actually broke the new high. So we have an uptrend of breaking this point. So that would be considered one right here because it continued. Hold on. So that would be the uptrend here because it broke that flat part. But then also right here, it continued that trend. So that's one movement. And then around this here, we're going to jump right into that. So that is about, let me see. What date is that? Around the 13th. So let's go around. Yeah, so actually, let's go back a month. So around that time, it actually went up, but then obviously it went back down. So we just need a confirmation. So apparently, it broke that level going into another leg. So, I mean, that's just a small little gain. But I want this leg to be higher than the previous one or the previous ones. So now, within the last 3 months, we have here, I'd say one leg until it actually stood flat and broke that level. And now we have a second leg there and it's starting to break down. So now I want to look at around this price to see what level that is. So we're going to look at the low about there. So now, what low is that? So we're talking about it has to hold up at least $22.31. But then look at the volume here. I want you guys to know something while I'm doing this. Um, Looking at this chart, uh, I've seen other charts that are better. How can I say? They look better than this chart that I'm showing you. And again, the reason I don't show you guys is because uh, it's pretty advanced, and I try to keep it basic. So when I'm showing you a chart, I want you to understand just by looking at it, just to get an idea and to see how things are done. Because the way I look at this chart, this is a more simplified chart. Uh, Me looking at this chart, I cannot day trade using this chart, or I can't really swing trade using this chart. I use a whole different set of indicators. Um, I use a similar indicator when it comes to the moving average. I still use a moving average, not the EMA. I'm not gonna say what because that's my own personal preference. And again, everybody has their own preferences. So I just don't want to state that. That's confidential. I do use a volume indicator as well, just not this one. And then I also use like a how can I say, like a price level movement line. I use that. So when that all comes into play, um, it just enhances the way I trade and look at things, because you see it and you'll be like, wow, like it's totally different from what I'm showing you here. So again, I use more of an advanced uh, system, the way I set up my format when I want to trade and swing trade and do all that. So anyhow, it's holding up above 2230. Now it looks like it's in the. I mean, I could be wrong, but that's pretty strong volume right there. That's confirmation. It started there, but now it's some confirmation there. I don't know if there are orders for tomorrow that are gonna be put in tomorrow as soon as the open, and then all of a sudden this thing might flush because of this. So, um, as like I said, as long as it doesn't go below 2230. Now, if it goes around here on this line, then I think I'd be a little concerned, because um, from here to the top to this line, that's most of the move, close to 200, because all you have is just pretty much this much space. Again, I'm just looking at lines and spacing. I'm not showing you even prices or percentages. I'm just showing you just by lines and graphs and all that of spacing. So from the 50 line all the way to 200, again, that's not a far gap. So I'd be definitely concerned if it starts dipping right below this light blue line, which is the EMA 50. I'd be concerned. So I don't know if there might be another rally. I can't say. There were a lot of huge negative surprises today. Again, with midterm elections. Uh, I'm not political, so I don't want to really talk about that, go into that. But again, when it comes to the federal government, they were disappointed. A lot of people were disappointed nationally that, Republicans didn't make a dominant wave throughout the whole U.S. and whatever. So that affects the stock market. So I would expect that a lot of rich people are Republicans, because they tend to favor their companies and those tax breaks. So anyhow, along with that, the other negative news was um, this guy named Bankman, I believe. He owns like a crypto exchange, and apparently he's starting to be known as a fraud. He was supposed to do an acquisition, and it's not going through. Um, there's a whole wide range of negative news going on. Facebook laying off people. There's a bunch of stuff going on. So, coming into the holidays right around the corner in 2 more weeks, it's just not a good sign. So I don't have anything for quants. It's not showing me anything for quants. So apologize for that. Now we're gonna move on to the next stock, and we'll look at the fundamentals real quick and continue that. But for this stock, let me see, 197, 244. So they're actually cash flow positive. The first time in a long time, I would say. So they have positive operating, positive for investing, and positive in financing. Uh, but I will say again, these are 2020 results, and I don't have anything for 2021. So what they do in 2020 might be different in 2021 or for this year. So I don't know how good their habits are, um, and how they manage money and how their skills are with that. So it's really hard to say, especially when it's 2 years behind. 1 year behind is fine, but we're closing in on 2022, almost going into 2023. There's only like less than 2 months left for the new year coming up. So, I mean, it's a shame to not have 2021 results here. So, again, I apologize, but it's not out of my doing. So, again, I hope you guys understand that. So, with that stock, I'm just gonna say no. I don't have any results, and then also, uh, just so you guys can be careful. To me, that's a huge indicator. I know this was going on an uptrend, but I don't like this. I don't like this. I don't like seeing this. And that was just a minor drop. And then this here, that's a big drop. Uh, that leads to further volatility and negativity. And mind you, just because this is red doesn't mean it's always going to be negative. Because there's times I've seen this red and this will still go up. So again, this is not like 100% accurate. It just depends throughout like the whole day. Because I mean, this doesn't change, but what I'm trying to say is that this doesn't take into consideration the volume there, like before the market opens or after. From what I know, I mean, I could be wrong, but I'm not too sure if it does. But for sure, I know it takes into consideration the open market. So that's why it's somewhat accurate. It's not like very accurate. And again, I can't give a percentage. Again, I wouldn't even say not even 90% accurate. It's just maybe 70 or higher. So I don't know. Next up is WF Worry Bank. So we're just gonna skim right through this and evaluate this. So strong earnings, I like that. Market cap, I like. 52-week high, pretty nice. PE is really, really low. That's scary. Very, very scary. And if they had a higher 52-week high, then I don't think I'd be concerned about the PE as much. But when it comes to the banks and then looking at the volume, this is a scary stock. This is pretty scary. People might say, you know, the numbers can be manipulated when it comes to PE, which is true, but for the most part, that's what people use, and that's what I use. Can't speak for anybody else, but to me, that's always been a great indicator, and I've never had any issues, and I use that to my preference because that's what makes me accurate. So I can only speak for myself on that end when it comes to asset management. So for anybody else, to each their own. good luck to what indicators you use, and that's what makes everybody unique. Everybody has their own preferences. So again, do what you got to do. So for the numbers, again, that PE concerns me. Really concerns me. Um, that 5-year trend, it's crazy. 2020, obviously, and then 2022. Uh, it's easy to be, bullish after 2020, but try being bullish during a market when it's not on your side. So I know a lot of people are frustrated because they're trying to make money and they want to get rich quick, but that's not the way things work. So, you know, I don't choose a side. I choose a winning side. So some people they just get emotional because they want to be right. Sometimes they're right, sometimes they're wrong. And I'm speaking about analysts and other YouTubers and whoever else thinks they're a genius um, in a bull market. But now that we're in a bear market, I don't hear a lot of noise. So again, I'm gonna do what I have to do. I stay focused, and we're gonna jump right through this. So we have a clear downtrend. It's try to fight back, then went back down. So in order for this to actually gain some ground, it would have to reach that level right here. So and then hold, not only just break it, it would have to hold for a few weeks just to gain some momentum. I don't see that happening, and you guys can clearly see. Look how slow that uptrend went up, and then it just went down. So what I'm trying to say is, uh, this line is at an angle, but then this line looks kind of like just like a drop. Look how flat that line is. It's almost like a straight line. So the straighter the line, the more dangerous the stock is, if you guys can remember that. The more angle on a line, no matter the trend, up or down, but the more angle on it, remember, the more angle on it, uh, and the more it's gonna be straight, the more angle that it's gonna have in order for it to be straight, that's how dangerous it can be. So, so it's better at a slow pace, and a slow angle. So I'm just gonna draw lines for you. Like for example, you have this line here, and then you have like this line here. If I was to draw like an arrow, see, look how fast that move is. Because you can get to this point, but it could have taken uh longer. Could have taken longer to get to that point, you know? And then I'll give you another example. Let's say right here, just, like right here. Let's say I started here and then could have went. See, and then you see this here? See how straight that is? That's very, very scary. So again, see? Uh, so again, that's pretty dangerous there. This is pretty dangerous here. You want everything to go slow and have some momentum, to have some certainty. But when you have these jumps like that, like it's just nuts. That's what you call volatility. And then the crazy thing is that throughout this whole year in 2022, it's happened like several times, like these jumps these jumps like up and down, like these really big jumps. Insane. So for this stock, we're gonna jump into the fundamentals. Again, I'm sorry, I know I'm talking too much. I just want to look at it. So it says its value. Obviously, value is the price, the highest rating. So what is the second highest rating for income? What do they pay? They're paying 2.5. I think they're better stocks than that, and other sectors that are better positioned than bank stocks. So now we're just gonna skip through all that. Uh, then we're just gonna look at the cash flow. Obviously, these numbers are wrong. It's saying in the trillions. I don't know why. Uh, I'm hoping this is an American market. Also, they're not. That's why. So they're in a different country. Now we want to see the cash flow. So negative 180 trillion. So negative. So this company has negative cash flow. Uh, I'm going to say no to this stock. So I'm gonna move on to the next one. EFSC. So did it break new highs? Almost. Price is higher than most. 52-week high and low. I like that. I like that. I like what I see. Volume, uh, market cap, not too small of a company. Uh, Shares are being bought. That's a decent size, about 2 million that are acquired. So it looks like it's trying to pop to new highs. Uh, I think this kind of stock would make a decent growth stock just by looking at it. Uh, it's not a bad stock, actually. It's not bad. I think once it has a little dip, depending on how far the dip is, this stock wouldn't be a bad stock just by looking at the first page. So now we want to continue real quick. They're beating earnings the last four reports, and then for annual results, I want to see what they have. Their margins look pretty low. It's not giving me any more info, so it's gonna be hard to navigate through this stock and see if it's good or not. It's not giving me any revenue or operating income. The net income has stayed pretty flat within the last uh, 5 years, up until 2021. That's when they had a big uptick. So it went from 74 million and pretty much almost doubled. Went from 133. So talking about 30%, I would say, um, at least. So balance sheet, obviously that's pretty close. For debt, it's pretty high. Yeah, it's pretty close. So it stayed flat, and then it stayed flat again. It grew a little bit there, and then it grew a lot, and then now 2022, um, I wouldn't be surprised if it grew again. But then that debt grew as well. So cash flow, we want to see that. They have a lot of cash hidden. So I do like this stock for the long term. I'm going to say yes to EFSC. Next stock up is FRME. So FRME hasn't broken new highs. It's at $2.58 billion market cap. Earnings seem okay. 52-week high and low is okay. The dividend I do not like. PE showing me undervalued. Sorry, that's a check mark. The volume is at 165. This is a stock where I don't know how active it is. So it is above the 3 month, but comparing to, I need to start comparing volume to see how active bank stocks are. Get an average, and then I'm gonna start looking at the good bank stocks and see, or the popular ones, the ones that go on an uptrend, to see if they have been, you know, having some sort of action on a positive note. So I could see this as a growth stock, but they do pay dividends. So it can't really be used as a growth stock. So automatically, once it pays income, it's, it's more on that category for income for that strategy. So then we have these small waves here up and down. So it's like going on an uptrend, and it's above the 200 moving average. And again, it is holding up for that level. So, it's kind of hard to see. I would have thought it was wedged. Hopefully, we'll see if it goes on an uptrend or not. We'll soon find out. So, let me see the ratings. Income has, I apologize, sorry guys. So, Income has a rating of 5.83, which is the highest rating, slightly above the value and momentum. And again, they're all pretty close, these three factors: income, value, and momentum. So we have basically price and momentum. So overall rating was a 2. It was a 2. I would have thought at least a 3. I would have given it close, like a 3.8, 3.7, closer to a 4. Let's look at the financials and we'll see what's going on with that. 2022 estimates, they're barely beating their estimates. So they beat them there. They lost there. I guess they met expectations. Hopefully they meet expectations. So they really didn't have a blowout quarter. They only had that big loss for Q2, which is understandable because of how the economy is slowing down. Now for the annual results, I want to pull these up and see what I get. Return on assets. So equity we have there. So it looks like they're doing a decent job on managing money. I guess the management for this company doing okay. 205. Again, it sucks. It's not giving me the income statement, only the net income for the income statement. It's not giving me anything else. Then for annual estimates, 205. Then the balance sheet at 15 for assets, 13.5 for debt. That's pretty high. 207 million. Then we have 124 So 1.4. So they're actually breaking even. They broke even. They broke even for cash flow. That's not a good sign. And net income, they are positive. This one's a tricky one because they broke even for cash flow. They're doing pretty good for net income. I'm gonna say no to this stock or hold. Actually, I'm gonna mention hold. Hold off. That'll get an H rating for hold. So it's not a yes or it's not a no. So for the last one up, PFC. So we have here Premier Financial Corp. Earnings are kind of low. They're positive, but they're kind of low. Yield is at 4.18. 52-week high and low. Volume, it's okay. It needs work. Looking at the numbers, they need work. 5-year chart looks more on the flat side. Slow uptrend, not bad, but it needs work. It needs work. Yeah, right away. I'm looking at it. It just needs work. So we have here 6.87, 6.97, and then they gave income a high rating. Yeah, I don't think so. I mean, overall, and even comparing to other sectors, no, I don't think so. That's a horrible choice for income when I know for a fact that there are better choices than that, and that'll save you money. So right away, I don't know why. I just don't know why they chose this rating as a income stock. Awful, especially for this sector. So rising dividends, not bad, but we can run through that real quick. So for that stock, I said so Premier Financial said no. I said no. That's an X. So that's pretty much it. I'm out of here. Time's up. Over half an hour. Again, I hope you guys learned a thing or two. When it comes to charting, again, I hope you guys highly appreciate it because I try to keep my charting to a minimum. I try to keep it basic. When it comes to charting, that's something I like to teach more on a greater scale and, a greater appreciation on it because I show it. Doesn't mean, it might work for you. I hope it works for you because, again, everybody has their own preferences. But, again, I hope you guys just get an idea as to how things work and if it works and you continue to use it, then hopefully you understand more and more and you gain some experience with that. So I'm going to close it off. Again, when it comes to technicals, I eventually I don't like talking too much about it. I don't want to confuse people. There's other channels that are better explaining technicals and showing all that and having strategies. And you want to learn about that. There's other channels that are better suited for that. Because a lot of people do either one or the other, fundamentals or technicals, but it's rare for people to do both, which I do. So again, try to keep it simple, which is what I try to do. And again, that's pretty much it. So thank you guys for watching. Have a good night. I'm out of here. I'll see you guys tomorrow. and we'll keep on doing these bank stocks. So stay tuned for the shorter version. Again, that's coming up tomorrow. I have a busy schedule. I have a life. I have a family and stuff. So I hope you guys understand. Uh, Again, I'm sorry that I don't edit my videos, but this is all the time that I have. So I appreciate your time as well as you appreciate my time. So again, thank you guys for watching, and I'll see you guys in the next one.